What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and to end the week, my guest is Scott Groves. He's a loan officer at Movement Mortgage out of Stevenson Ranch, California, which is near Los Angeles. Scott, welcome to the show.
Thanks, man. Appreciate the interview and great getting to know you here in the last 10 minutes. I'm glad you connected.
Absolutely. So, Scott, thank you so much for being here. Why don't we start off the show? Can you just tell us a little bit about yourself? Give us a brief introduction of who you are.
I've been doing this for 20 years, probably have a similar, origin story like every other superhero that's a loan officer that's been doing this for more than 10 years. Fell into the business in 2000 after I got out of the Army because, nobody grows up wanting to be a loan officer. Fell into it because I was working a teller job doing banking when I was going to college. Lost all my money, slept on a couch in 2008, 2009, just like every other loan officer in the country. And then really started to rebuild that purchase business starting in 2009. Was able to double my business a bunch of times until I got to a standard of living that I'm super happy, blessed, and comfortable with. And then because of our success, our team's success over at Movement Mortgage, started turning to a situation where I got a lot of questions about kind of how we did things, what our system was. Let's be honest, we're super blessed here in Southern California with the loan sizes and the loan amounts and the purchase prices. So it makes our volume look really good. There's a lot of people in our company that crush me in unit count, but our volume looks good. So was getting a lot of questions about kind of how we do things. That morphed into a coaching program. That morphed into a book that I wrote called Lead Generate 61 Days to Double Your Pay. And now, fast forward several years, we're here in the shelter in place, filming this the end of April while we're all dealing with this COVID-19 pandemic. And knock on wood, coaching business is still going strong. That takes up, a day of my time on Sundays and a couple minutes every morning. And then the mortgage business is still going really strong. So, for all the craziness that's going on out there in our country right now and the people that are dealing with true tragedy and some who are dealing with loss of life, like I just, I can't be more happy about the situation that I'm in. Families here are happy, healthy, business is still happening. The mortgage industry is still working. So that's 20 years in 2 minutes.
So you said you've been in the industry for about 20 years now.
20 years.
Again, you said you did some type of work before you got into the industry?
I did a lot of odd jobs in high school, manual labor jobs. I worked at a paintball gun range. That was fun. Then I went into the Army, and straight out of the Army, I ended up at Washington Mutual. For those Wamulians who are watching this back in the day, was a teller for about 30 days. They realized I was a horrible teller, but I was pretty good at talking to clients. So they put me into a training program to do loans, and then, never looked back. Like a couple of years later, dropped out of UCLA, where I was attending like an extension program, stayed in the mortgage business. Wish I would have finished college just for my own ego. So anybody watching this who's not in the loan business yet, finish college. That's what I tell my 18-year-old kid all the time. Just finish college, then go do what you want. So started at Washington Mutual and just rode that wave up. Really feel like my career has been in two segments because I was doing a lot of second mortgages, refinances. I was kind of an application jockey at Washington Mutual, just sitting in the branch, not really building a business, not really working on a ton of purchase loans. And then after everything crashed in 2009, I didn't really have any other skills. So I had to teach myself how to actually, read the tax returns and do purchase loans and build a real referral business. So I kind of feel like I have, my post 2009 career and my pre 2009 career. Just all mortgages. It's really the only thing that I've known for my entire adult life.
Yeah, makes sense. And like you mentioned, we are in a very strange time right now. So what are you doing to get past this period of uncertainty?
It's interesting. I was just talking to a mentor of mine, and we were talking about how kind of like there's this relative time shift right now, right? Because one, everybody's at home, so they have more time on their hands. When we're dealing with real tragedy or calamity or complicated situations like we are right now, we need to be sharing more information more frequently. And then, the tragedy that we're dealing with COVID-19, it's forcing people to think about some crazy stuff like their own mortality, right? And so I think that you have to have a thoughtfully aggressive way. And I stole this from my friend Chris Lockheed. You should check out Chris Lockheed, Lochhead, Chris Lockhead. Check out his podcast on Follow Your Different, because he's been talking about this idea of how do you be thoughtfully aggressive, right? So maybe that portion of your database, those referral sources, those past clients that you would have called once a year or once a quarter, we've kind of got to be talking with them every couple weeks to give them relevant updates. And you can do it in a thoughtful way, right? Like checking in to see how somebody in their family is doing in a genuine fashion, and then seeing if, like, hey, I'm not a medical professional, I can't solve all your problems, but in the lane of which I operate, which is, home loans, mortgages, finance, overall real estate market, can I add any value, information? Can you refinance and save a couple $100, which is probably more relevant now than ever in the time that I've been doing this business. So I think it's just a matter of being thoughtfully aggressive. And how do we do that with our database of clients and referral sources?
Okay, so with what you see, going on right now in the industry, what do you see happening in the future?
That's a really good question. Something that affects us out here in Southern California specifically is, all the jumbo investors basically pulling out a couple of weeks ago. So, Wells Fargo being kind of that first domino to fall, where they say, well, we're not comfortable with having our delegated or non-delegated jumbo product offered through a Movement Mortgage, or pick one of the other, 200 retail banks that have popped up over the last 20 years. So, I'm worried about that. But I'm hesitantly optimistic that we've already seen a few different investors start to trickle back into the market or not pull the plug. CIT Bank on the jumbo side, Goldman Sachs on the jumbo side. There's some people that are staying with it. So what I would like to see happen is that I would like to see jumbo sources come back, some more non-QM sources come back, because there's a very responsible way to do bank statement loans and things of that nature, which kind of all went away over the course of a week. So that's what I would hope to see happen. What I am a little bit hesitant of, and what I'm a little bit worried about, is 25, 30 million people going on unemployment over the last 2 weeks is no fucking joke. That's catastrophic. 1930s depression era situation where we have 30 million, young men, young women. Usually the people that are the most vulnerable are the ones that work in service industry and retail. Those were people that were already kind of looking for those entry-level jobs to move up to a middle management job where they could maybe one day buy a house. A little bit harder to do in a lot of areas of Los Angeles, obviously, but for most of the country, if you have, a married couple and they both kind of have those entry-level to mid-management retail jobs, like they can buy a house in a lot of the country. And I'm very concerned that we might see, whether it's a year or a whole generation of lost buyers, because, they're going to have the psychological damage of the government telling them you can't work and you can't make a living. If we look at people my age and a little bit younger, like people that came into the workforce 2008 to 2011, they're really gun shy about investing in stocks. And they're still really gun shy about maybe buying a house because of what they saw in 2008, 9, 10 with the market crashing and kind of blood in the streets in the housing market. Well, now I'm worried that you might have a new generation of buyers that should be getting excited about buying a house in the next 12, 24, 36 months, but they might be in a situation where they're a little gun shy and they're just recovering from not being able to work for a few months. So that's my concern. But, the good news about tragedy is that they always pass. So we'll find a way to get through it just like anything else.
Yeah, very interesting. It's definitely something to think about. And yes, definitely light at the end of the tunnel. And moving along, you said you were a coach.
Yeah, kind of happened organically, right? Like 5 years ago, again, mostly because we're kind of blessed with the loan sizes here in California. I was the number one guy at Movement Mortgage nationwide. That led itself to those 5-minute calls, right? Like anybody who's successful in any realm who might be watching this, you've gotten the calls. It's like, hey, can I have 5 minutes, 10 minutes? And what I found is I'm kind of a intellectual philanthropist. Like I like to help people. I like doing these type of things in conversations. So I found that these conversations were eating up more and more and more of my day. And so I ended up formalizing it into a call. I'm like, hey, anybody who's interested, let's get on a call Thursday morning for half an hour. That way I can spend 90% of my time doing mortgage business and 10% of my time helping people. And then once that call started to get 30 or 40 people, and I was like, hey guys, I'm going to charge you a little something for the effort. So now, I basically have a side hustle. Some people sell stuff on their phone through Poshmark or whatever the fun app of the day is. For us, I spend a couple hours a week focusing on my coaching clients, filming some content, getting out to them. But yeah, coaching loan officers has been really fun, because I think something you'll discover as you advance in your career is like eventually getting one more deal for myself is not as rewarding as giving some knowledge to somebody else who can get one more deal, that actually changes their life. So yeah, it's been a wild ride. It's been a lot of fun.
Very, very cool. And so now, both as a loan officer and as a coach, what would you say is the most satisfying, fulfilling, or rewarding thing about your job as a coach and as a loan officer?
Yeah, I mean, I kind of like two things about our job the most. One is what motivates me is just building a better mousetrap, right? Like I've probably vetted every CRM and every piece of technology out there. Currently, I'm really in love with this project management workboard called Trello, Trello. If anybody wants kind of a rundown of how we're using that, you can just email me at Scott Grove's team. I'll give you the rundown on what we're doing with Trello. So I like that kind of waking up at 6 o'clock in the morning, waking up at 4 o'clock in the morning, getting to work by 6:30. And just trying to create that better client experience, that better mousetrap. Like I'm already kind of in love with the system that we're using here at, Live TV or BeLive.tv. So I'm like, oh man, how could I integrate that into a better client experience? Maybe have some conversations about pre-approvals, on a web-based browser. So I really enjoy that stuff. And then, I still believe that the number one way that most middle-class Americans grow wealth is through home ownership. Whether it's paying the mortgage down or seeing the mortgage or the value of the property appreciate, or one day being able to take cash out of the house to pay for their kids to go to college. Like for a vast majority of Americans, a lot of wealth is created through their personal residence, and it helps that there's still a tax write-off there. And so I still really get a kick out of that first-time buyer that maybe thinks they can't buy a home. We have a conversation. We kind of demystify things. We use real language instead of some mortgage jargon. And they're like, oh, okay, cool. I can do that. I can go from being a renter to an owner. That still gives me a lot of joy. And I look forward to that.
Absolutely. And so shifting gears here, when you first got started out in the industry 20 years ago, what were some struggles or obstacles that you faced early on?
Yeah, it's a good question. I think one of the things that I struggled with, one was just fear, right? So I was just some knucklehead who came out of the infantry and the army. Like I didn't know anything about the world of finance. Neither of my parents had gone to college, or I doubt at that point either of my parents even had a 401k or whoever had ever owned a house. And so I just, I started on a journey of kind of just endless self-improvement. I took some CFP classes, which kind of give you an overarching idea of like, how do trusts work? How do finances work? How do you read tax returns? So I had a lot of fear in my knowledge base, and you can kind of see behind me. And then, that's a bookshelf of all kinds of financial books and coaching books and self-improvement books. I've read. Still can't find a way to stop eating the Oreos and the pizza, so I'm carrying like 10 extra pounds I wouldn't want to. But yeah, I think a lot of fear about my knowledge base. And the good news is for $15, like the book that I'm working through right now, a buddy of mine, Joey Coleman, wrote it, called "Never Lose a Customer Again." Right? I'm not particularly good at setting up those retention mechanisms up front with my clients. So for $15,
yeah,
you can write, you can read this book and dive into like a world-class example on how to retain clients in the first 100 days. So, putting in the work was never my problem. I did have some fear about my knowledge base, a little bit of a chip on my shoulder about never finishing college. And so those were a lot of challenges for me. It's just more like what's up here instead of what's out there.
Okay, awesome. And you are a coach, so you should be able to answer this one pretty good. Say you're talking to a loan officer that's just starting out in the business. What advice or what tips would you give to them?
Yeah, great question. Somebody who's starting out, obviously, if you're picking this moment in time to start as a loan officer, little bit of a challenge. But I would say two things. One, if you're brand new, your first 5 deals are going to come from in here. Like maybe your first 50 deals are going to come from in here, are going to be somebody you know, a friend of a friend, a business partner of a friend of a cousin who introduced you. So what I said is like, hey, go to, if you have an iPhone, you can do the same thing on Google. Just go to your contacts. If you scroll all the way down past Z, all the way on the bottom of your phone, it'll tell you how many contacts you have. I keep every realtor or client I've ever done in my contacts. So I have 12,550 contacts. The lowest number I've ever seen is 600. The highest number I've ever seen is 20,000. So you'll have somewhere between 600 and 20,000 people in your phone, in your contacts. And without judgment, without fear, just go through and let everybody know, hey, I'm working with this team. I've got a great system and, mentor, and I've got backup basically. When you, a friend or a family member, is ready to buy, sell, or refinance a house, I want to be here as a resource. And the thing is, like, you can't have any judgment around starting that conversation because, your cousin Fred who lives in Minnesota, who doesn't have 2 nickels to rub together, you'll probably think like, well, I'm here in California. What value is there in having that conversation with Fred? But trust me, Fred's boss's boss is wealthy enough to be moving to California or buying a second home on the beach. So you've just got to get that momentum going and have those conversations. I would even say, forget about being new. Even if you're, seasoned, I don't have as much business as I would like to have right now. I should be going through my phone every day and starting 10 or 20 of those new conversations, just cut and paste a text message to anybody you know. Like, hey, when you, a friend or a family member is ready to buy or refinance a house, I would love to be that first point of conversation. So that's my first thought, is being that trusted resource and letting everybody know what you do. And then, number 2 is picking some piece of technology or marketing or lead generation and be world-class at it, right? Like if you want to work with, your team and buy VA loans, be world-class at it. Know every single guideline on VA loans. Immerse yourself into the VA community. Like if you're not a veteran yourself, learn how they speak, learn what their nomenclature is, learn what a DD-214 is, right? So if that's the angle you're going to go that route and go all in. Don't get scattered all over the place. If you're going to be an expert on a CRM and you're going to have this great workflow and follow-up emails and drip campaigns and text messages, be world-class at that. If there's one thing that I'm not naturally strong at, is I'll jump kind of all over the board, right? I'll go from this CRM to that CRM. And I probably, for the size of the database that I have, I'm probably underperforming the market. Like I probably don't have as many loans in the pipeline as I should, because I kind of like to try out a bunch of things. And that's just my personality. It leads to being able to have good coaching conversations. But I would say, again, whether it's a piece of marketing you're paying for or a piece of technology you're paying for, get world class at that, and then add that value to the existing people in your phone.
So brand yourself, pick a niche, and go all in on that niche.
Yeah, there's a great book. I referenced them already. Chris Lockhead, depending on how you want to pronounce his name, whether you're using the American or the French introduction or incantation. It's called Niche Down. And Chris wrote a great book alongside with his business partner, Heather, about how do you pick a niche and get smaller and smaller and smaller. And I can't remember if it's from this book or one of the podcasts that Chris did, but he talked about a CPA that works down in San Diego, where this CPA is like, I don't want to just do military tax people, or I don't want to do with the taxes just for military. I want to do the taxes for military special forces. I want to do the taxes for military special forces who have been overseas, because I have found some unique, tax write-offs and workarounds for them. So it's like he just advertises to special forces that are stationed in San Diego, that are in the military, that have served overseas in the last year. And he's got like 1,500 clients. That's all he needs to make a great living. So same thing for us in the mortgage business. If you niche down and you find out what you really want to be good at, or a system you really want to be good at, or a method of lead generation you want to be good at, just pick that and do it and be world-class at it.
Yeah, so pick a niche and then a sub niche to a niche and go really detailed.
As deep as you can go, the best. The deeper you
there will
go,
always be an abundance of people. Like you said, that guy is like 15,000 contacts.
totally.
So in recent years, technology has made its way into the industry. You were talking about drip campaigns and CRMs. How would you say this has technology has affected you and your business?
Yeah, it's a really good question, and I think the answer to that is always evolving, right? And I think there's certain processes and systems that can be automated, and we can use technology for, and that's all important, right? Because that helps scalability. And so I think the tightrope that we need to walk as loan professionals is, how do we make the busy work more technology and system oriented, but we make the communication more personal, right? Because if you're watching this and you work at a retail bank, New American Funding, Movement Mortgage, Prime, Guild, whatever, or if you're a broker and you've seen maybe your rates increase a bit over kind of just what's going on in the market in this COVID-19 pandemic, either way you slice it, like, we're not going to be the low cost leader, right? There's going to be a bank that will beat us on rate, or there's going to be Quicken who will beat us on rate. Something will happen. So if we're not going to commit to like a race to the bottom and cutting our comp and being the low cost leader and working for less than, professional loan officers know their worth, where we can add our value is systematize what you can systematize, use technology where you can use it. Of course, like, I'm a big fan of technology, but you also have to have those high touch checkpoints where you're having a human conversation, you're instilling confidence, you're using, commentary that's not jargon. Like, one of my biggest pet peeves in the industry is underwriter approves a file, processor looks at the conditions, cut and paste them, and sends them to the client, right? The client doesn't know what the fuck an LOE for Wells account 243 DEP 312 for $700. They don't know what that means. Like, that's almost insulting and mean to use language and nomenclature that the client doesn't understand. So what does our team do? We do not allow our processors to send out the condition list. Myself, my LOA, my loan manager, we will take 20, 30 minutes out of our day, go through every single condition, write it the way that a human would write it. Like, if they were trying to read it and they didn't understand the mortgage industry, then we'll send it out, and our processor then takes over and does a great job of chasing stuff down and getting that deal to closing. And that's one of the reasons I work at Movement, because their processors close deals really fast. But for those high trust touch points, going to Todd Duncan's coaching about high trust sales, those high trust touch points where the client, they don't want to get the good news that their loan's approved and then get, 7 pages or 1 page or 3 conditions of jargon that then takes them from this point where you instill confidence, the loan's approved, into this fear-based, like, oh my God, I don't understand this. Is my loan really approved? Is this going to fall apart? What if I can't get this thing? So, I want to use technology anywhere where we can systematize things, but I want to use humans, myself, my loan manager, my loan officer assistant. I want to use humans to start bridging that gap and keep bridging that gap where they know that there's a human connection. So very long answer to your simple question. Sorry.
Yeah, I love it. So basically just those tasks, automate them and streamline them, but always keep that human touch and human element in it when it comes to communication and relationships.
Yeah, absolutely. I mean, look, we have great technology at Movement, as does many other companies that, give milestone updates and whatnot. But a client getting a form email that says your appraisal's back is not the same thing as getting a human phone call that says, hey, congratulations on the house. The backyard looks awesome. It came in at the contract price. This is one big hurdle that we just got over. You and your agent did a great job picking the right property at the right price. That goes much, much further than, here's your automated email. Your appraisal came in at $742,000. Like that's just garbage. So, you use the technology to gather paperwork, to do all the busy work, and then deliver good and bad information with that human touch.
Okay. And are there any modern strategies that you guys are using to either maintain better relationships with past clients or just systemize and organize your business?
Yeah, I think social media is a double-edged sword and I think that's kind of the modern way that we communicate, right? One-way communication, posting videos, getting content out to our past clients, whether they're in a Facebook group or you interact with them from your business page, or whether you actually friend request all your past clients. I think the modern way of communicating as a loan officer is mass communication, where you're talking to one person. And what I mean by that is that if you're going to send out a Facebook Live video, or you're going to send out a BombBomb video, that's a piece of technology I like that does, video embedded in email. If you're going to do something video, or you're going to write a press release or a newsletter or something like that, by all means, amplify your message, leverage technology to get that message out to hundreds or thousands of people, but talk to one person. So if your favorite realtor is Bill, when you're answering questions or you're giving a market update, talk as if you would talk to Bill, because that's going to come through in your video and your messaging of like, oh, this is conversational. This is a real person. This isn't some bullshit template email that corporate wrote up. It's like, no, they're going to get it. Like, you're talking to them. And if the message doesn't resonate because there's not enough realtors like Bill, well, then either just niche down and find more Bills, or accept the fact that your message has to change a little bit. So I think using all the modern technology we have, email blasts, video email, social media, I think that's super important to staying relevant in a modern market. But just remember, every time you go live, every time you craft a marketing email, write it as if you're talking to one person or one client or one realtor, and that will help the message come out in more of a authentic flow.
Definitely. Great tip. And last question here. Where do you see all of this going in the future in terms of technology and how it impacts the mortgage industry specifically?
Yeah, it's a good question. I think the psyche of the loan officer is separated into two camps. And one camp is like, hey, we might get to a point where you can only make $500 a loan because technology has taken over and lead generation is perfected on the digital side. And like, maybe we get to a point one day where like, there's only 3 or 4 conversations per transaction that I have to make. So, or that I have to have. So I'm only going to make $500 a deal. And if that's the case, all right, cool. Well, then I need to find a way to do 100 deals a month, and I'll just have to find a way to scale and move with the business. I think that's kind of one train of thought with loan officers. I think the other train of thought with loan officers is like, oh, all we needed was a little recession, a COVID-19, a 2009, a 9/11, and all these tech startup companies that think that they're lenders, they're going to go away and then we'll go back to business as usual. I think, as usual, the answer is probably somewhere in the middle, where, yes, there will be a cross-section of consumers that can get a loan kind of like they, fill out their taxes for free on TurboTax. So at some point, 30, 40, 50, 60% of the market will be able to go on a TurboTax-esque platform, kind of sign up for their own mortgage, file their own application, do all that stuff. And then, 40% of the clients will need some type of consultative approach. They'll need some help structuring their file. Their file will be too complex for a TurboTax. And what will happen is, just like in the accounting industry, TurboTax will take up a big market share. H&R Block Online will take up a big market share. But the accountants that are left over, that are really consultants, that are really professionals, they just get paid significantly more than they ever thought they were going to make growing up. Yeah. So, to the loan officers out there, shoot me an email, find out more about our coaching, buy the book for $10 or $15 or whatever it is on Amazon, because you have to lead generate to get to a point where if 60% of your market share goes away, you're still making a great living, right? Because there's going to become the great cleansing of loan officers is coming, because those people that are doing a deal or two a month, or they're making $80,000 or $100,000 a year, they're not going to stay in this business if they take a 60% market share cut because Amazon Mortgage perfects it and they become the new TurboTax, right? But if you get your income to $200,000, $300,000, $400,000, $500,000, you can take a 60% pay cut and still make a great living, filter through whatever those first couple of years looks like, and then come out the other side, in my example of the tax preparer, as in that consultative manner, making more money, doing even more market share. So I think everybody's just got to elevate their game because the technology is coming. We'll end up somewhere in the middle. A lot of you watching this won't make it. And the people that do make it, like, you're going to just capture more market share, more volume, and make more money because that's just the way business works.
So those who evolve and adapt will thrive in the end.
Absolutely. Absolutely. And those who can afford, frankly, because of either their savings or their volume, to take a significant pay cut, like let's just kind of walk through the hypothetical. Amazon Mortgage comes out tomorrow. And if you have Prime, because they want the mortgage to now be a feature of Prime, if you have Prime, you get a free appraisal, right? All of a sudden, a lot of my clients who work in technology, they have a high trust level with Amazon, they're a Prime member, they're going to ditch me in some situations to save $500 or $600 on their appraisal. And I just have to accept that might be part of our market reality in the future. What I have to do is I have to have enough volume, enough income, enough savings to hold on for a year or two to see, like, okay, how does this normalize? What clients are left over? How can I be more of a consultant to the clients that really need me? Maybe we charge a premium to those clients that need a consult instead of just need a mortgage application. And somehow it will all normalize, but it might take a couple of years to get there. If you're making $50,000, $60,000, even $100,000 a year, and you take a 50% pay cut because Amazon Mortgage launches tomorrow, you're not going to make it. So get your business and your savings and your professionalism and your acumen up to a point where, like, you could take a big hit and you're still going to be okay. Your family's going to be good. That's what I'm encouraging all of our coaching clients.
Definitely. And where can they find your book? Do you have a website, or where can they find it?
Yeah, the easiest thing to get in touch with me, just find me on Facebook, Scott Groves. I've got a pretty active business page and personal page. We'll post a link here in the Facebook live stream to the book. And then, of course, on Amazon, everything's on Amazon, including my book. Maybe I'm creating my own competitor. Lead Generate, 61 Days to Double Your Pay. Scott Groves, find me on Facebook or Amazon, and we'll go from there.
Awesome. Well, Scott, I really want to thank you so much for taking the time to come on the show today. And I had an amazing time talking with you.
Thanks, man. I really appreciate it.
And to all the viewers for watching, thank you. And we'll see you again next time.